Holy tariffs. Trump came out and just hit us with a bombshell. I mean, I'm pretty confident the stock market was already pricing in the worst case scenario. But guess what? Trump came out and hit us with the worst case scenario. I mean, it was way worse than what anyone was expecting, and that's what you're seeing in the stock market today as we make new lows. And so in this video, I'm going to talk about the implications of these tariffs and what it means for the market and the economy in both the short term and the long term. And I'll also talk about, maybe the best case scenario where maybe this is not as bad as it seems on the surface. So if you like videos like this, please consider subscribing to the channel, like this video, and let's jump right into it. All right, so to get started, I want to react to this short clip by CNN, and this was before the tariffs came out, just to, kind of paint a better picture of what the markets were expecting.
More limited tariffs on some countries, and then this more extreme option of potentially an up to 20% universal tariff. Investors and economists have said to me that that is really the worst case scenario. That is the most extreme item on this tariff menu.
All right, so with that being said, all right, Trump did come out with a universal tariff of 10%. So every single country, that we do trade with is going to have a minimum of a 10% tariff, all right, which pretty much trumps any tariff that we had recently. But again, watching this video, they were saying that a 20% tariff would be the worst case scenario. All right, so I know you're probably saying, well, Jack, if the worst case scenario was 20%, right, universal tariffs, and we only got hit with 10%, well, what's the issue? Well, yes, 10% tariffs, universal, every country is getting hit with, but there are specific companies that are getting hit even higher. So let's go into this list, and some of the countries that we do the most trade with, right, like China, is getting hit with 34%. Okay, so if 20% was the worst case scenario, 34%, that's a lot higher. I mean, that's almost double than the worst case scenario. And you also got to realize, like, yes, every country, might be getting hit with 10%, but we don't do a ton of trade with every country, right? So these countries are arguably more significant since we do more trade with these specific countries, right? So, you have the European Union at 20%, the Vietnam at 46%, you have 32%, Japan 24%, India 26%. You get the picture, right? So now let's talk about the logic behind this, right? I mean, obviously Trump's not trying to crash the markets and the economy on purpose, but his idea is, hey, I want more business being done in the US, right? So we outsource with other countries simply because it's cheaper to manufacture in other countries than it is the US. But Trump's pretty much saying, hey, we're going to make it more expensive by adding these tariffs, right? And that's going to drive companies to start building and manufacturing cars in the US, right? And that's the whole idea, is that when you do that, you're going to offer a lot more jobs, and then that's going to, boost the economy and whatnot, right? But this is my issue with this. Let's say at some point, whether it's during Trump's presidency or the next president, that they come in and we go to free trade, right? Or we scale things back. Well, then guess what? You have all these companies that just spent billions and billions and billions of dollars building and manufacturing, products and vehicles and whatnot in the U.S. And then you go back to free trade. Well, no matter what way you look at it, it's going to be cheaper for companies to manufacture in, China or any other different country, pretty much. And then so what are they going to do? I mean, obviously their profit margins and all this will be a lot higher, and they'll make a lot more money by doing that. And so then I could just see them going back to these countries and, begin manufacturing more there than the U.S. And then what happens, right? Now we have jobs that are going to be lost in the U.S. and, it's just going to be like a ripple effect. And it's, could be pretty bad in that scenario then, because you have all these investments that just kind of, go bad, right? And then so the question is, you have like Meta and Apple and, all these companies coming out saying that we're going to invest all, this money into the U.S. economy and build these manufacturing centers here and all that. And, I start to question it, like, do you really think they're going to do that? Like, maybe they're just saying that for right now until everything kind of blows over, right? And eventually these get dropped or whatever it might be. But So that's one implication, obviously. All right, so I want to jump back to this video real quick.
And just to give you some context there, the budget lab at Yale said that, look, if there's this 20% broad tariff, on top of the already existing tariffs that Trump has put into place, well, you'd be looking at a U.S. tariff rate at almost 33%. That would be the highest since 1872, when the President of the United States was Ulysses S. Grant. And the Budget Lab warned that, look, you're going to see price increases in many different areas that consumers would feel, including on clothes, food, electronics,
And so that's what I wanted to jump into next, right? Like, what are the other implications of this? Well, obviously, when other businesses, are going to be charged more in tariffs, it's going to increase the price of products. And then so who pays for that, right? I mean, obviously, the companies are probably going to pay for some of it. And you have, the suppliers will split some of the costs, but, it's going to get passed down to the consumer, right? And that's going to increase inflation. And obviously, we've been trying to fight inflation. And so you add these tariffs in here, and then God forbid we get stagflation, which is pretty much like, inflation coming back into the picture. Holy smokes, man. Like, you want to talk about a recession. I mean, it could just get bad really, really fast. But again, your food, your clothes, computers, like all these things are going to get more expensive. Cars, he's adding a 25% tariff on vehicles. That's going to increase the price of cars. So there's a few ways to look at this. And I think Trump is also, what he's trying to do is, get yields to come down, right? And that's one silver lining, is that yields have been coming down. And what's that mean? That means interest rates are coming down, all right? And I think Trump is really hoping that by, putting so much pressure on the economy, it's going to cause the Feds to come in and lower interest rates. And that's, essentially a stimulus, right? That's going to make, buying a home cheaper with lower interest rates, or buying a car, or the U.S. and their debt crisis. I mean, they're paying like trillions of dollars in interest, I believe, just in debt. So obviously bringing down those rates will help the U.S. in that way. And I think, that's part of this. But this is my opinion, all right? So in the short term, this is going to be a rough ride. I mean, I think the market's going to be extremely volatile. Honestly, I do think the chances of a recession are definitely increasing with this, right? And I think in the short term, within the next year, things aren't going to look so pretty, all right? With that being said, I do think in the long term, things could start looking better, right? And this could just be kind of like a little flush out, where things get worse before they get better, right? And that's obviously what Trump's promoting in this. And so I don't know. You let me know what you guys think. Is this disaster? Do you see a recession coming? Do you, feel this is good or bad? I would love to know your thoughts in the comments. Obviously, everyone has a different opinion on this stuff. All right, let's hop back to this video again real quick.
And they say that these price increases would really eat into Americans' disposable income, that the typical middle-class family would lose about $3,800 in disposable income. Now,
again, that's pretty much what I was just saying, right? This is going to increase the cost on consumers with everything that we buy in, our everyday life, whether that's food, clothes, whatnot. So again, that's going to put pressure on the consumer. They're going to have less money to spend. And these are really just things that kind of lead us up to, a recession. Because at the end of the day, most of the time, a recession is self-inflicted. So when people really just start getting so fearful that they stop spending money, they start taking their money out of the market, they start panicking, they stop spending completely. And, businesses, obviously, revenues and sales go down, and it's a ripple effect. So this obviously is not going to help at all. But I think a big question here too is to see what the Feds do. Do they step in, or do they really just say, hey, because of, the chance of inflation coming back, we are definitely not cutting rates now, right? And that's just going to put even more pressure on the economy and the stock market. Now, one other thing that I wanted to mention, all right, is Trump specifically said that he is not open to negotiations, all right? This is makes things even worse, right? Because a lot of people have been predicting Trump's gonna come in really hard, really high on these tariffs, and it's just his, leverage to negotiate, right? It's just his starting point. It's hey, someone wants $700K for a house, and you come in and you hit them at $600K, and then you kind of meet in the middle at $650,000, right? That was kind of the theory. And so with him coming in saying that, hey, we are not negotiating, these are the tariffs, period, that's another thing spooking the market right now. And so in the beginning of the video, I mentioned, maybe a scenario where things aren't as bad as they seem. And that is if Trump is really just bluffing everyone right now, right? And if you're a master negotiator, right, or a good negotiator, it makes sense, right? You don't want to show your cards, right? You want to hold strong because, if you mention that, oh, but we're willing to negotiate up front, then country's just going to be like, this guy's a joke. You know what I mean? Like, he's not serious about this. To where in his scenario, if he holds strong, right, and then really just has countries getting down on their knees and like, please, negotiate with us, then he has more leverage, right, to get exactly what he wants. And then if, I don't think it's going to be in time real soon, but, a week, 2 weeks, 3 weeks from now, whenever it might be, if that plays out, right, I think that would be a huge catalyst for the markets where we could see a pretty big bounce or recovery in the market. In my opinion, at this point, I don't know. It could be short-lived. The question is Trump actually willing to do that? Is he bluffing? Or, do you think that eventually he'll negotiate with these countries if that's their overall plan? Now, the thing that worries me on top of this, though, is that, what if countries retaliate? I think Canada already came out pretty much saying that, they're going to raise tariffs on, certain manufacturing and, they're going to put restrictions and this and that. So that's another worry, is that we're going to go into a trade war, right? Where just like every country is going to start retaliating and they're going to raise their tariffs, and then that's going to make things even more expensive. And it's like, all right, so this already looks really bad. God forbid countries come out that now consider us the enemy, and they're like, okay, you're going to do that, we're going to raise ours even more, right? And then what if Trump raised them even more, right? I mean, it's like this could just turn into a huge disaster. Another reason to be very skeptical of what's going to happen, and then also another reason why the markets are just not liking this news at all. All right, so we could just take a look at the market real quick. You can see, from the highs, we are down. This is the QQQ. So, pretty much the NASDAQ 100. At one point, we were down over 15% from the highs. And just keep in mind that a recession is considered 20% or lower. So we are getting pretty close to, technically being in a recession. Let's go ahead and take a look at the SPY real quick. All right, so, you can see from the highs here, chart looks very similar, but we're roughly down, 11% at the lows on the SPY. So, obviously the Qs and the NASDAQ, they are a little bit more volatile than the SPY, but still, we are, I guess, technically in correction territory, but we are definitely on the verge of, things going south really fast if this keeps up. So if you're wondering, Jack, is it a good time to buy the dip in the market? Honestly, anytime the market's down this much, in my opinion, yes, but only to dollar cost average into high quality companies, right? Don't go all in and buy the dip hoping for a bounce. Just slowly keep buying in. And I don't think you can ever go wrong doing that in the long term. But that's all I have for you guys in this one. I hope you guys found this video insightful and helpful. If you're still here, please consider subscribing to the channel, like this video, and I'll see you in the next one.